Good afternoon, everybody. Thank you all for joining me today. Today, I am talking with Yuen Young. He's the CEO of Casoro, which is a commercial real estate investment company in Austin, Texas. If you all are fans of Shark Tank, you may remember Yen from years ago when his sushi company won a big investment from Shark Tank back in the day, but he's very well versed in the commercial real estate space. We're going to be talking about all kinds of stuff about Austin and how that translates to what's happening here in Raleigh. So thanks for joining. Feel free to drop your comments in the comment box if you have them, and we'll get to them as we are able to. Thanks for joining me today, Yen. I appreciate you being here.
Thank you for having me. I appreciate the invite.
Yeah, so, okay, today I'm going to be asking you a lot of questions about the Austin economy and about Austin specifically as a tech hub. And the reason I'm asking this is because there's a lot of people out there, and I might be one of them, who feels like Raleigh is an up and coming Austin. And the dynamics here of the tech industry and the type of economy we have is going to lead to the kind of explosive growth that you guys have seen in Austin over the last 20, 25 years. So if you wouldn't mind starting by telling me, how long have you lived in Austin, and were you there to experience that shift from it being kind of an insignificant small city to, the world-class city that it is today?
Yeah, it's funny. I'll tell you a quick story about that. I used to travel around, and when people asked me where I was from, I told them, "Oh, I'm from Austin," and they go, "Oh, I love Boston. Boston's a great place." I said, "No, I'm from Austin." They're like, "Where is that?"
Where
I was
is
like, "It's the
that?
state capital of Texas."
Yeah.
So that gives you a lot of relevance to the way people think about Austin. Now, when I tell people, "Hey, I'm from Austin," they're like, "Oh my God, love it!" Right? Great city. So I've been in Austin for now 31 years,
Okay,
and
wow.
I went to school here and stayed and built my career and my family here. And so when I came to Austin originally back in 1992, it was still a small college town. And Austin was really, the population was really built off of students going to the University of Texas and then the state capitol itself, which would come in and out of session during legislative sessions. And so that was really the only population and growth of Austin at that time.
Mm-hmm.
What started happening right around the same time when I was here was there was the person by the name of Michael Dell, and he went to the University of Texas and started selling computers out of his trunk in his dorm room and started realizing, hey, there might be a real business here.
Yes.
And of course, we all know Dell and where that is today.
Do you
And
know him
that really,
personally? Did you go to school
I
with
don't
him?
know him personally.
Okay.
I've only met him once, so I can't say I really know him personally, but
Okay.
we have met once, and a very nice guy, and met his
Okay.
wife and their foundation and everything. And so with that was kind of the beginnings of looking at Austin as a potential tech area. And then what you found was then IBM started building kind of a small hub here. Then some of the startups started happening, and companies like Tivoli got bought by IBM. You had Applied Materials here. You started seeing more of the tech scene started happening. There's another company by the name of Silicon Labs, which is a big publicly traded company. They were kind of a startup here. And so the startup environment in the tech space is really what turned Austin into what it is today. And today, we're a couple of million big. I think we're the 10th, 11th, 12th largest city in the US, and kind of known for tech. And today you've got Samsung here, you've got Tesla building their Gigafactory here. Google, Facebook, Apple, they're all doing HQ2 here. And so that's what's really been driving the growth of Austin over the last 30 years.
Yeah. Yeah, I do think we have a similar dynamic in Raleigh. We're also a university town. We've got NC State, and then right up the road in Durham Chapel Hill, we've got Duke and UNC, and we're also a state capital. And then we've also got the tech industry that's now really, really starting to take off over the last, 5 years or so. I mean, it's been, with Research Triangle Park, it's kind of been there for a little while, but I think it's really kind of IBM's a little stuffy and older. I mean, right? Let's face it. But we've gotten a lot of the kind of new startup kind of tech here in the last handful of years, which has really been great. Are you seeing areas of Austin like? Okay, let me rephrase that. So is the tech industry becoming something that's ubiquitous to Central Texas now, or is it mainly kind of in the city of Austin? Are you seeing it kind of spread? And has COVID changed that?
Yeah, it's definitely spread. It's not just in Austin. And if you look at the actual locations of these tech companies, you do have Google, Facebook, kind of downtown, but then Dell is actually in Round Rock, which is a
Okay.
subsidiary outside of. It's its own city outside of Austin. Then you look at Samsung, and they're choosing to build their plant out in Taylor. So that's a little bit further out as well. Tesla is building it down in Del Valley. So actually, the conversation is not just Austin and Austin downtown, which does have a lot going for
Hmm.
itself as well. But a lot of these tech companies are coming in the surrounding areas as well. So we're finding that the growth in Austin is really expanding in all directions.
Hmm.
So if you go west side of Austin, it's growing. You go east side of Austin, it's growing. You go south of Austin, it's growing. You go north, it's growing. And so it's really starting to be where it's multiple rings, if you will, across the board.
Yeah, we're seeing a similar thing, and I'm trying to kind of anticipate where those big booms are going to be because we still have towns where you can buy a single family home for under 250, which is shocking in the United States these days. But we have that within a reasonable drive to Raleigh. So I'm trying to kind of like analyze, right, where are these next big places coming, and we're seeing some of that kind of growth, tech growth outside of our areas, which is informing that a little bit. So has COVID, did that get that dynamic of companies moving from the city out to the suburbs change with COVID, or is that something that's been kind of happening for a while?
That's been happening. What COVID really did was the acceleration of people working from home.
Hmm.
And how many people could actually still work but be at home. That was the part that was amazing. Obviously, you still have service industries and certain places where people have to show up. But
Right.
when you look at the overall, Austin being a very big tech and knowledge worker centered city, all the knowledge workers can work from anywhere. And people start
Right.
realizing, gosh, I could be in the Bahamas if I wanted to, and still make this work. And so what we found was that the office space is changing, the dynamics is changing, but from a living standpoint, that didn't change and actually increased the demand. So during the pandemic, we actually had a big housing boom. Most of the price increases actually happened during the pandemic.
Right.
Yeah,
Yeah,
yeah.
same here. So what about, I know during COVID, like a lot of companies kind of shut down their commercial spaces, and some said they were doing that permanently. Is that influencing the commercial real estate industry as an investment? Are those companies coming back, or what, how is that? How does that look now after COVID?
Yeah, office space is still it's starting to come back some, but it's still not where it was in its heyday before the pandemic. Before the pandemic, they were trying to build more office space because they were running
Mhm.
out of spaces and more people were coming because the expectation was everybody went to the offices to work. Now, with that change, what we're finding is that some of these companies are on long-term leases, so the space is just empty. It's fully decked out. They have this all this square footage, but there's just nobody actually showing up there.
Wow.
The conversation now is like, okay, some companies are saying, okay, I need you to come in 3 days a week. Other ones are saying, I need you to come in once a month. Everybody's a little bit different. And what we're finding is that now the concept of office space is more about stations and workstations, gathering rooms, that sort of thing. So, I would, the best example would be kind of a WeWork model, meaning that
Mm,
it's more of like plug and play style office space. And what you find is that people actually like that. They don't want to have a permanent spot with an office, but hey, if I show up and I come in, I need a place to plug in my computer, log into the Wi-Fi and get going. Or if we're going to do a team meeting, hey, let's do it in the conference room where we get some snacks and drinks and that sort of thing. And that's really where office space is going. So I think that there's going to be a little bit of a change and revolution of office space and the way we think about office space. And the big boss doesn't necessarily need the big corner office anymore. There's just
right.
not a whole lot of need for that anymore.
So, what percentage of companies do you think will remain at least partially remote? This actually has a pretty significant impact on what real estate does over time because, like, when everybody was moving here, I know mortgage companies were requiring them to show some kind of proof from their employer that they were willing to let them work from home permanently because we got so many people coming from all over the country that were like, oh, I'm remote, so I can just, work from anywhere. And the mortgage companies got wise to it pretty quickly. And they were like, wait a second, what if they call you back in 6 or 9 months. And so they were making them prove with some kind of written documentation that this was a permanent thing. And most companies were willing to do that. Is that kind of still, do you think that's like, this is like a complete permanent change? I know some people want to go back, but I don't know. What do you think?
I think it's a if you're talking about the macro, I think that we went from everyone in the office 100% with maybe 99%, then maybe 1% could work from home on occasion on a Friday. And then because of the pandemic, we went all the way to the other extreme where almost 99% of everybody was working from home with a few people coming in. I think somewhere it's going to be somewhere in the middle, right? Where
Yeah.
you're starting to see some shift back towards the middle space. I think that's where we're going to land at the end of the day, which is going to be, there's still going to be a need and a drive for office space, but it's going to come in a different way of you thinking about it. I think that the cubicle farms might be less, but you're still going to have spaces where people can gather and team and culture still are part of the conversation. So I don't think it'll go away, but I think the demand of it is different, and what you need is going to be lessened. And that then, that's only one of the major groups of real estate, because office space is one of them, but then you still have residential housing, you've got industrial, you've got retail, and that's starting to change, and every aspect of it is starting to change as well too.
Interesting. Okay, let's talk about Raleigh. What do you think about this idea that Raleigh could be the next Austin? Is that something that you think is a reasonable idea? And do you advise clients to buy commercial property here in Raleigh? Is this a great place to invest?
Yeah, so first off, we love Raleigh, right? We love the Raleigh-Durham area, and it's an area that we have a lot of interest and we do a lot of studies on. The key there is a couple of factors. It's really the leadership of the city and where they want to go with it, right? Um, Raleigh, probably a little bit similar to Austin, has a little bit more freedom and openness to how things work, which drives a lot of the demand and how people want to be there. And people want to live near universities because they're more forward thinking, and the universities also foster more startups in tech, in healthcare, all the different areas, more engineering, that sort of thing. So I think Raleigh is perfectly positioned for that growth. You also look at the fact that the weather pattern for that area is really good too, right?
Yes.
Yeah, it's not overly cold at certain times. You have 4 seasons almost, right? So I think that has a lot going for it as well too. But I think the key is going to be when you look at city council, you look at mayors, you look at city planners, are those officials thinking about the city for growth, right? And is the environment for those companies to start up or come to Raleigh, is it the right environment for them to come to?
So you're probably thinking along the lines of traffic patterns, public transportation, that sort of thing.
Tax incentives, right? The desire for more innovation, right? Those, that type of thought process is going to be what drives whether or not Raleigh becomes the next big kind of, main, tech or knowledge city, right?
So I feel like to this point, we have been very business friendly. I think we're the number 47 in the country for taxes. Like we have like the lowest business taxes in the country, except for like 2 states. I don't know if that's something that you're thinking is like maybe changing, or what was your, I mean, it seems like you've got some thoughts behind that idea.
So the incentives are a big part of the conversation, right? So Austin got going because of the incentives. Dell actually started in Round Rock because Round Rock gave them more incentives than the city of Austin. So you got to think about that. It just happened that the proximity was close enough, so it kind of grew the whole process. I think that officials need to think about the business environment, the tax incentives, and whether or not they can attract some of the bigger companies to go there, and is the environment friendly enough from a business perspective. And so, I think through kind of the mayors, the city councils, and all those folks, the mayor was really pushing at that time. The mayors were really pushing for economic growth. But then you also had city council that was fighting it because they didn't want the population growth, right?
Yes, there's
so then you
always
might have an
always
infrastructure
those.
problem. Yeah, you might have an infrastructure problem. And so when you think about investing in real estate or going into real estate, especially in the surrounding areas, you got to think, okay, well, is that area going to be annexed or in some way provided with some of the infrastructures that's needed? Electricity, water, right, sewer. Those are basic infrastructures. In order for real estate to develop and grow, those are the infrastructures that cities they have to plan and decide if that's where they're going to
Yeah.
spend the money. Just things
Yeah.
to think about, right?
Right. Yeah. It's definitely the speed at which the growth is happening can sometimes be hard to keep. I mean, there's only, so much you can do in a short period of time to, put plumbing throughout all of these small towns that surround us or whatever. We've got a couple of questions here.
Okay.
Let's see, or comments maybe. Lucky enough to be remote 100%, just hard to find decent housing as a young couple starting a family in the Triangle, hoping things will become a little more affordable. I would say that there's definitely inventory opening up that there has not been. We've probably got 3 times as much inventory as we did a month ago. It's still strongly a buyer's market with only about a month's worth of inventory, but you can actually get in as a young person. 6 months ago, you had to have $100,000 in cash with, to cover appraisal gaps or whatever. You don't have to have that anymore. So it's definitely getting easier. Feel free to message me through Facebook or whatever if you want to talk more about that. And then Christian says, Austin might be going bust though. Would you like to comment on that, Yuen?
I've lived here long enough. No, I've seen the booms and busts of Austin, right? So I lived through 01, right? September 11th, that financial and world change. I've been here since 08 and saw the financial crisis go through here. I wouldn't say it's going to be a bust. I think that definitely the growth will have to slow down. I don't think that craziness of the last probably 5 years, maybe even as high as 10 years, is going to continue. I think that there will be growth, but I don't think there'll be a bust. I don't think it'll be a downward trend. So it's still desirable enough, I think, overall for it to maintain. But good point. I guess if you're not growing, you're busting. So however you want to look at that.
I mean, this is what drives migration, right? I mean, places get too full and too expensive and you have to move on to the next thing. That's life. That's just the way it goes. And people forget that.
Yeah. And then actually that brings back to
we lost him.
Around the idea of a young couple trying to get into a home and making the affordability. I would almost say for that young couple is to go after what you can afford, and even start smaller, because you can always then sell and rebuild it and keep going. But the earlier you start, I think the better it is. The earlier you start building equity, the earlier you own real estate for yourself, even if you're paying a mortgage, the faster your wealth will grow over time. So
1,000% agree. Get a condo or a townhome if you can't. A lot of people come here and they want a single family home, and it's getting not as possible for young people to buy a single family home, but there are definitely condos and townhomes that you can get into. So
that's exactly right. Yeah. Start building the equity now. Yeah,
absolutely. Have an investment property. You can always rent it. Okay. Somebody else, Alessandro. Hey, Alessandro. She says, we left Austin not realizing this place was going to be similar. More were moving to Austin than Raleigh when we left a year and a half ago. I guess a lot of people, yes, are moving to Raleigh as well. It is a great place to live. Everybody wants to be here. The traffic to get to Raleigh is nuts. The grocery stores are wall-to-wall people. Traffic in Wake County is crazy. Infrastructure can't keep up with all the transplants moving in. There are certainly some places.
Austin's no different.
Yeah, it's not as bad as Austin here, I don't think. I just and there's different parts of the city that are particularly bad.
Yeah.
So
and think about it this way. I mean, Austin for a long time with city council fought really the growth, and so there was no investment into infrastructure from a transportation perspective. And so now we're finally passing $7 billion transportation bills to try to keep up. Right.
Yeah. And, to some degree, you got to have the money before you can build the infrastructure. So there is that, you have to get to a point where you have the tax dollars to, it's expensive to build roads and all of this stuff, That's right. All right, let's see. What else do I have
Somebody
here?
Said it's worse in New York City.
Yes, it's worse. Absolutely,
Always.
It is. Okay, let's talk about this, what we were talking about earlier. So the CEO of Redfin said that recently, like last week, I was listening to a YouTube video or something, and he said that the compound annual growth rate in Austin, when extrapolated out, would be negative 42% over a year. So, one, is that a reasonable thing to do, to take 1 month's worth of growth or shrinkage and extrapolate it out over a year? And two, what do you think is a reasonable way to judge what's going to happen within the next year?
Yeah, I mean, none of the stuff is ever linear. So, if you see an upward trend and you think it's going to go up forever, you're wrong. If you see a downward trend and you think it's going to go down forever, you're wrong too,
Yeah.
because the markets fluctuate. That's the beauty of supply and demand and the fluctuations of that. I think that the more key look is not to take a rear view mirror look and say, well, last quarter does this, so this is must be where we're going. What we need to do is take a forward looking and say, okay, how much population is still coming? What is the demand for housing for that? How much inventory do we have online? How much do we not? So Austin in particular, we're looking at it from a perspective of, well, how much single family homes, for example, as an inventory set, where do we stand relative to the amount of people coming and people who want to buy? That then bleeds into the demand for multifamily, right, into our apartments. And what we're finding right now is, because there's been a little bit more inventory growing in Austin and interest rates are going higher and people can afford less, what we find is with that activity is more people are going back to renting and waiting a while. So actually what it does is it drives demand. It's not that the demand for housing changed. It's just where they go. Do they rent? Do they buy? Do they go big? Do they go small? That's
Right.
really become the conversation. So I don't know if we can say that things are going to be straight down. I think there's definitely a pause in terms of the rate of growth that's happening. Doesn't mean
Absolutely.
it's not going to grow, but it's going to be probably a little bit slower than what we saw over the last 10 years.
Yeah. So something else that I think was really interesting idea that we're talking about earlier is that um, a lot of people think that the market is crashing, and I think there's some like this negative 42%. I think there's some maybe misunderstandings, or like kind of reading the data incorrectly about what areas are going to crash and what areas are going to continue to increase, or maybe not have as much of a decrease if that's what happens. And I think it has a lot to do with where people want to live. Like, a lot of people think that, I hear people on YouTube, especially, oh, this is the next area because it's cheap. Well, being cheap doesn't necessarily mean that anybody wants to live there.
No.
You know what I mean? Now, it can be cheap and a place that people want to live, but it can be cheap and it can be someplace that they've done nothing to make it a nice place, and so nobody wants to be there. Can you talk about that? Like, how do you determine where the next place is that will grow into something valuable and
Yeah,
where
so
people want to
so
be?
so that's Ellen, that's a really good question, because we do spend a lot of time looking at data in terms of migration. So we look at all the U-Haul traffic.
Mm,
So we look at where U-Hauls go one direction and which directions that they go, from whether, especially interstate wise. When you look at the growth and need of services like Amazon and where they're trying to grow and build, that tells you a lot about where the demand is really headed. Because remember, Amazon has to deal with what we call the last mile of delivery most of the time, right? So
mm.
it's easy to move stuff on the big macro level, but then you get to, I got to get to this house on this street. You start seeing where the infrastructure needs are. When you look at those types of data, that'll give you a very good indication of where growth is actually going to happen, because those things are like them paving the road so that people can get somewhere. And so when U-Haul start all going to Raleigh, Raleigh's going to be growing, right?
Right.
And doubt about it. When you start seeing Amazon say, "Hey, you know what? We need to invest in industrial warehousing in this area because we know we're going to
Because
have
we're
to."
driving too far to get to there.
That's right.
Oh,
Yeah, they
yeah.
can't, right? They can't because it costs them too much to do it. So they're very strategic on that, right? We love looking at, like, where is Whole Foods or Trader Joe's going to go next, right?
Yeah.
They see the demographics, right? And in terms of where you are, with being in the real estate business, you probably see where the houses are being bought or sold and where's inventory coming and going. That'll give you a good indication of what area is hot and what area is not. So I would always say look for what I would call leading indicators versus lagging indicators in the markets that we deal with.
What's an example of a lagging indicator?
So lagging indicator is, okay, well, what was housing prices last month? Did it go up or down? That's lagging.
Gotcha. Okay.
Yeah.
Okay.
Yeah.
Yeah, that makes sense. Okay. Lee and Heidi say they're watching from Pinehurst. Thanks for joining us today. All right. If there's no other questions or thoughts, or do you have anything else to add? I've asked all the questions I was going to ask today. What do you think?
I think the final thought that I would leave everybody is to think about real estate in much broader context. And in that broader context, think about it from focusing on where the knowledge workers are moving. So these are people with technical skills or higher. Focus on where they're migrating, where they want to live, where they want to work, and where they want to play. And when you focus on that, I think what you'll find is that's where the real estate is going to probably be the most valuable, and that you'll get the most return on your investment. So just that last thought that, don't focus on general population, focus on the knowledge worker population and see where they're moving.
So this is interesting. I'll say this one last thing. I'm working on a video for next week about the 3 emerging markets in the Triangle. So these are like 3 towns that are kind of surrounding Raleigh that are the next up and coming. Because like I said earlier, there are little towns all over here that are inexpensive, but not all of them are places that people would want to live. So I'm kind of looking for those places where people would want to live. I'm looking specifically for governments that are doing things to attract like knowledge workers, to attract companies that want to kind of grow their footprint in North Carolina. And there's 3 right now that are doing a lot of infrastructure and investment and things like that, specifically for the biological sciences, the life sciences companies, which is another big industry here. So I look for that. And then I also look for cities that are investing in their infrastructure in things that people want, like parks and greenways and the arts, because there's these little small towns, like some of them you walk into them, half the little shops are boarded up and there's nothing happening. And then some of them in the middle of nowhere, there'll be these vibrant little communities with, all kinds of stuff happening and things to do and concerts and places to go, all, an hour from Raleigh with nothing, but they actually are a vibrant community. And then I look at crime rates. Nobody wants to live someplace where there's a lot of, what I mean? They just don't. Right. They just don't. And so, do you think those are reasonable things to be looking at?
Absolutely. Yeah. Those are brilliant. I think they're brilliant. Yeah.
Awesome. Couple of more questions before we go. Thoughts on increased new construction in RTP despite market correction. What do you think that means?
I'm guessing they're talking about the new construction, the supply that's going to come on, even though that there may be market corrections, meaning it's coming down. My thought is simple. It's not so much that the demand has shifted, but the macroeconomics is giving everybody pause. I think the moment the confidence comes back, you'll find that, interest rates might go back down again and things start picking up again. But it doesn't change the fact that Raleigh might still be a great place that people want to come to. And if that is the case, then even if you bought a little bit high or whatever, just ride it out a little bit. Long term, it should be very, very solid.
Yeah, that's kind of been my thought too. Like, this is still a great place to live. The number of companies wanting to invest in Raleigh and move either a headquarters or a corporate office here has more than doubled in the last year.
Yeah, those are leading indicators,
there's
right?
People coming here, and we're in a little bit of a lull. And I'm like, buy right now when nobody else is. When people are like, they're afraid to buy. This is the time when you buy.
Yes.
When those other things look good. All right, couple more questions here. Also, what do you see happening if hypothetically Meta and Google pull out of coming to RTP? If they were to pull out, that would be a big indicator that like the economy was really bad.
Yeah. Raleigh is not a desirable place for their employees to live. Yeah.
Yeah. That would look ugly to me. I don't see that happening, but that would be very ugly. I would be very nervous if I saw something like that happen. Yeah,
for sure.
All right. Well, thank you everybody for joining us. Thanks, Yuen, for joining us. And we will have watch it on the replay if you didn't catch it all, but I hope you all have a great afternoon.
Thank
you.